Hey, hello guys, I'm back. Leo tuna cover something called candlestick pattern signals. And the number one candlestick pattern signal tutakuwa tukiangalia ni a hammer. What is a hammer? How does a hammer look like? A hammer, it signifies a reversal to the upside. If price, example, let us look at this point here, right here. So, after price never reacted to that order block, lakini let me first show you what I mean by a hammer. How does a hammer look like? This is what we call a hammer. Let it be a bullish hammer. So this is a bullish hammer. So that is it. So this is how a bullish hammer looks like. The color doesn't really even matter. Sawa. The color doesn't really matter. So if you find this pattern, this is what we call a hammer. Sawa. A hammer. Sawa. So if you find this pattern in a downtrend, then it form in a support zone. Sawa. It will give you a confirmation or a confluence that the price is heading up. So it signifies a reversal to the upside. Then we have the second candlestick tutakuwa tukiangalia ni nini? Ni a shooting star. What does a shooting star actually tell us in the market? A shooting star is a reversal to the downside. It signifies if price was in an uptrend, right, exactly kama hapa, then tuone nini? A shooting star. Ingetuambia nini? Price is heading, he is heading down. Example is this candlestick light here, this candlestick light there. That is a hammer, is a shooting star. Even though sometimes the shooting star inakuwa na a small body. Example, let me just give you an example of a drawing of a shooting star. That is it. Don't mind about the color. The color actually doesn't really even matter. What matters, this pattern imeokaa wapi. Sawa. That is what really matters. If this shooting star occurs in an uptrend, it signifies that price is reversing from an uptrend to a downtrend. So we shall expect more short positions actually. So what will happen at that time if this shooting star occurs in what we call a support zone or a demand zone, ama in an order block, ama a fair value gap according to your entry criteria? That is when you get to make a decision if this price has already given me a shooting star and we are in an uptrend. So we wait for a break of structure to the downside, a retracement to a fair value gap or another block. Then this shooting star forms, giving us an entry point for more short positions. As simple as that. So we are going to look next at what we call a doji. What is a doji and how does it really affect the market? Ama what do we expect when we see a doji forming in the market? Number one, when we see a doji, we expect something called indecision in the market. No, not the buyer, not the buyers, nor the sellers have made the decision to push the market up or down. So they are both struggling and the market will open and close at the same position. Sawa. So this is how a doji candlestick looks like. The market has opened in the same position and closed in the same position, leaving us a wick like that. Sawa, my people. It is as simple as this. This is what we call a doji candlesticks, signifying indecision in the market. This is a doji, signifying what we call indecision in the market. Sawa. Then we have what we call engulfing pattern. What is an engulfing pattern? An engulfing pattern is whereby, just a minute, an engulfing pattern candlestick. In candlestick trading, an engulfing pattern is a two-candle reversal pattern that signals a possible change in market direction. It occurs when the body of the second candle completely covers. Understand here, it completely covers. The second candle completely covers the body of the previous candle. This is what I mean. Just an example I can illustrate right here. That is the candlestick. So we shall start with an example of what we call a bullish engulfing pattern. When this occurs in what we call an uptrend, in a downtrend, it signifies what we call a change in market, in a market structure shift. What do I mean? The market might shift from a downtrend to a buying, from a downtrend to an uptrend. Sawa. This is how what we call a bullish engulfing pattern looks like. Sawa. This second candle has been covered by this candle. Sawa. This is what we call a bullish engulfing pattern, candlestick pattern. When it occurs in a downtrend, in a support zone, it signifies what we call a change in market direction from a downtrend to an uptrend. Sawa. That is how a bullish engulfing pattern really actually works. So we go to what we call a bearish engulfing pattern. This will be a bearish engulfing pattern. This is what we call a bearish engulfing pattern. So, what does it actually mean? Remember what I said about engulfing patterns. The last candle to be formed, it has to be enclosed by the new candle. It has to be covered by the new candlestick. Sawa. And this bearish engulfing pattern signifies what we call a change, a reversal from an uptrend to a downtrend. Sawa. If this pattern occurs in an uptrend, and the uptrend we are in what we call a support zone or a resistance zone, or a bearish, or in what we call a bearish order block after a retracement. It will give us a confirmation for short positions, or entries will be sales in that market. Sawa. That is what it signifies. Okay, guys, this is what we call a bearish engulfing pattern. Every pattern has its own job, if I may say, and we can actually try to find. Actually, let me just give the nini for anyone who wants to continue learning about them. So I'll just give examples. Niseme for a doji ni hivi, for nini, what the work, the purpose. So candlestick, I'll just write the name, I won't draw them again. Candlestick, then we have the purpose. then we write the purpose. So number one, I will start with what we call, I will arrange them. We have a hammer. Secondly, we have what we call a doji. Thirdly, we have a bullish engulfing pattern. I'll just use a pattern, not a candlestick. So yeah, because it contains two candlesticks. Sawa sawa. So nikisema candlestick inamaanisha moja. So we can just say bullish engulfing pattern. So then we have the bearish candlestick pattern. Yeah, like that. So what is remaining is the purpose of these candlesticks. What is the purpose of the hammer? Number one, what I have just told you about the hammer. Number one, the purpose is what we call a reversal to the upside. So just sorry about that. So the purpose of a hammer, venye tu nimezipanga on the candlesticks, then to the purpose the same zita align. Sawa sawa. So don't make the mistake of kusoma mambo yako kidogo ama confusing. Sawa sawa. So number one, we have the hammer. A hammer signifies a reversal. A reversal to the upside. Let me come back to it again. When a hammer is formed during a downtrend, and in that downtrend, tumepewa something we call a support zone ama a demand zone. It will signify that price is no longer heading down. Price is trying to push up with momentum. Sawa sawa. So at that time, after a hammer has been formed in a zone, a support zone or a demand zone, we shall be looking for more buy positions. So what will what will happen when? So we can go back to we can go now to a doji. Oops. Upside. So go best. So we go to a we tumeluka moja. It's a shooting star. So I'll just leave nisahau, but yeah, shooting star na venye nakuwa tu nimezipanga in my mind. So that is a shooting star. We are talking about a shooting star. It signifies a reversal to the downside. Sawa sawa? A shooting star, a reversal to the downside. To the downside. What does it mean? If we are in an uptrend, then price in that uptrend we have what we call, maybe we had a zone, a surprise zone or a resistance zone. So price itupe nini in that uptrend or in that surprise zone? Itupe a shooting star. Itatuonyesha nini? Price is no longer trying to head up. The buyers are no longer in control. The sellers are now in control. So what do? We sell massively, okay? But with what we call risk management. Risk what you can afford to lose. Sawa sawa. So then we are in something called a doji. What does a doji really show us in the market? Inatuambia aje? The doji actually inatuambia indecision. There is something we call indecision in the market. And actually venye nimeiandika, it's so signifies indecision. The buyers know the sellers have control. The price imeopen at the same time na ika close at the same position. Sawa sawa. So now we are in something we call a bullish engulfing pattern. What does a bullish engulfing pattern signify? It signifies what we call more buys when it occurs in what we call a bullish engulfing pattern. When time it occur in a demand zone ama a support zone, it signify now buyers are in control of the market. Sawa sawa, buyers wameamua kupush the price up vibaya sana. That is what a bullish engulfing pattern signifies. So a bullish tutandika, it signifies an uptrend. So a reversal to the upside. Oops, ninaandika na kasm, or reversal to the upside. Now this one inafanya nini? It signifies reversal to the downside. Reversal to the downside. Let me just use an example in nini nilikuwa I was working. Oops, sorry about it. In a photo that yenye nimekuwa tu, I had nini to generate it for us, so you can see what it really means by a bullish and bearish candlestick pattern. This is what engulfing patterns looks like. We have the bullish engulfing, market may go up, so ina signify nini? Price is pushing up. Sawa sawa. At first we have the bearish candlestick, then this bearish candlestick, it is covered by a bullish candlestick. Sawa sawa, ndo inamaanisha that being covered, ndo inamaanisha engulfed. Sawa sawa. The same is happening to the downtrend. If it happens in an uptrend, then ikwe on a resistance ama a supply zone, itakuwa ikisignify nini? Sellers taking control. Sawa sawa. It signifies reversal to the downside. Sawa sawa. And key tips to follow, inafaa ikuwe in a certain zone enye ume identify. You just don't trade it because umeona this pattern. It might end up growing your account if you don't actually know how to draw these zones and support these zones. So follow me, subscribe to my channel. If you want to learn more, join my community. We can learn more about the support and resistance, market structure, liquidity zones, and how to utilize the higher time frames. And as you can see, number one thing about me, I only use the 1 hour to take a trade. And this is a position I'm holding in gold. And why did I actually enter in this position? Gold gave me this last break of structure. After giving me this last break of structure, what did gold do in the morning? It broke to the downside, sweeping this liquidity right here. What did price? So what did price do? Price did not break the high and did not break the low. So what is our target? We are waiting for this price to break the low after now rebalancing these imbalances right here. Ama this fair value gap, it should be balanced. Sawa sawa. And in that fair value gap, we had something called an order block. I will be teaching more about order blocks and fair value gaps, so you can join my classes. So after now, this is my target, this order block. Sawa sawa. And this previous day low. So what do I expect? Price might come, liquidate, then ituachie nini? Ituachie something we call a wick. For those who are in my classes, they know what a wick means in a candle, in the candlestick. That will signify liquidity sweep, sweeping this previous day low and the candle closing above, above this order block. signifying what we call it was a liquidity sweep on the previous day low, and we are heading to the upside. But today we only had this short position in gold, and we were very, very happy about it. GBPUSD, we had a short position. I know you can't see it very well, and a buy position that I'm watching out on. This was yesterday trade. We were targeting this order block right here, and as you can see, TP was well taken. And then I had this short position from this order block. Hope you can see this position up to this order block, and TP was well taken. And I'm expecting price to come back up here, liquidating these highs right here. Sawa. So I'm expecting more buy positions in GBPUSD and in EURUSD. Okay, as simple as that. This was a short position I took yesterday in gold, in EURUSD, and I took another position in EURUSD. Entry was from right here up to this order block. So join my classes and mentorship. You will not regret it, my people. I only trade using SMC and ICT. ICT actually is it teaches you how to identify zones of liquidity. As simple as that. And actually, guys, thank you for being here with me and keep supporting me until we get to reach our goal. Okay, guys, thank you very much. And actually continue subscribing, liking the video, and actually bring more students who want to have what we call financial freedom. Not right away, because trading will take time before you get to understand how this thing work, and I can help you step by step to grow into this career. Sawa. Thank you very